Hello. Hello. Good afternoon, everyone. So, nice to see you all. How are you all? Fine, everyone. So, the shock of the result was there. I guess you all are appearing for the January 26 attempt, no? Already given once, no? Studied everything. Where you all are lagging, what things you have done wrong. So, this is the time when you actually introspect. You actually look into yourself that where you went wrong in the last attempt. Okay, no? So, see, first of all, I'll introduce myself. You must have heard about my name. Myself, Professor Umang. I'm coming all the way from Gujarat. There is a state called Gujarat. You all must be aware about that. Hello? Yes or no? See, I am not a dinosaur, okay? So you all are not supposed to be afraid of me. You all are my younger brothers and sisters, okay? So you all are supposed to interact with me. And if you will not talk with me, no, I'll sit down here only, yeah? Then somebody from you will have to come and teach. Hello? So interact with me, okay? Only then the sessions will be lively. Only then you will understand bloody what is happening, okay? See, as I've told my name, I'm there into teaching since last 15 years. Gray hair, you can see. So 15 years of experience is there. And since the last 10 years, I'm doing one and the single thing, you know what? Teaching taxation only. And just imagine, in these 10 years, how many students I would have taught and how many times I would have taught the same thing. Yes or no? So all the experience which is there with me, okay, I'm here to share with you all. Okay. But a simple small thing I would like to tell you, that whatever we are going to do together, okay, basically I'm here to teach you taxation, and that too also specifically direct tax. Okay. 50 marks syllabus. Okay. We'll try to cover up each and every aspect of your CA intermediate direct taxation, and I want to make you all ready to face that examination in January 2026. This revision lecture is basically for that only, that where you were going wrong, if there are some conceptual problems which are happening, those things will also be cleared. Okay, if there are some problems in solving the questions, already I know everything, but I'm not able to start, that where to start and how to start the questions. Yes or no? So I'm there to do that with you. Okay, so I would require your support from your side, because there will be few things which I will be telling you to do at home. Religiously you are supposed to do all those things at home. Okay, trust me on this. By the end of my syllabus, my personal guarantee that you will enjoy this subject like anything. This would be your one of the favorite subjects. If you were afraid of this subject, trust me on this. Be focused, be with me, and do those things which I'm telling you to do. Okay, and then your fear of this subject will be gone. Okay, so on this backdrop, let's start. Let's start. Sure. Good, great. See, in taxation, no, there are two parts. One is direct tax, another one is indirect tax. Okay, each carrying how many marks? 50-50. Okay, so in 50 marks, your 15 marks are there for your MCQs, and 35 marks descriptive questions are there, right? No, see, these 15 marks are not easy to score. You must have got the idea, because direct questions are not there. MCQ questions are also case study based questions. There you require your conceptual understanding. If you are not conceptually clear, what will happen? You will not be able to score in this area also. Okay, and as far as this area is concerned, first question, Tell me. Compulsory question? How many marks? 15 marks. The entire DT syllabus is there in that single question. Computation of total income and tax liability. And what to do, what not to do there. We are completely clueless at the time of examination. What to do, how to start the question, yes or no? So see, we are going to develop that particular thing. But before that, before starting that, a simple, requirement is there that why you are actually studying this subject. A little bit of interest development has to be done. Because if you will be interested in knowing that what this subject is exactly and why this subject you are, learning, then it will be easier for you to connect with me and connect with the subject. And if you connect with me and connect with the subject, what will happen? You'll start liking the subject. And if we like someone, we hold them with us. Yes or no? Hello. So, see, how many chapters are there, everyone? Did you ever try to count the number of chapters? No need to count also. I will be telling you the entire process, okay? And once you will be aware about the process, you will be aware about the topics also, okay? So the first chapter which you did, okay, was introduction and basic concepts. Yes or no? Then the second chapter was residential status and scope of total income. The third chapter was salaries. Then it was house property, capital gains, then PGBP, other sources. These are the 5 heads of income, no? Okay, no? Okay. Then after that, clubbing provisions were also there. After clubbing, set off and carry forward is also there. Then chapter 6A deductions starting from section 80C to 80U. Then if you do all these things now, if you reach till here, then only you can attempt that 15 marks question, first question. See the gravity of that problem which you will be having in the examination. You don't know that from which part of the syllabus they are going to pick up the things to frame this question, 15 marks question, yes or no? But one thing is very sure, PGBP is there. Hello? Without PGBP, that first question is not framed. PGBP is there. Now, with PGBP, there are other topics also which they mix. Sometimes house property is there. Sometimes IFOS is there. 2-3 deductions from chapter 6A they will ask. Then they will try to make the problem a little bit complicated. Yes or no? But if you'll understand the entire flow, which I'm going to tell you now, trust me, not a single question will be difficult for you. My target is not here to solve the questions from each and every small topics. Those will be done by you only. My target is to solve those questions with you. 15 mark compulsory question. Because of that question, many of you are afraid, okay, how to tackle. And see, this January 26 attempt is a golden attempt for you, I'm telling you all. Why? Because after that the syllabus is going to, not the entire direct tax will change. Everything which you have done will be same only. But you will have to do the amendments and all. And sometimes it becomes very difficult for us to include the amendments in our studies for the May 26 attempts. Getting my point, what I am trying to tell you. So this will be your last chance to clear this taxation. If you don't clear this time, what will happen? You will have to again restart the studies, including the amendments this time. And if the amendments, if you consider, we don't know the amendments, how the effect of amendments will come in the question, and in that particular case, how we are going to solve the questions, how we are going to write down the answers, which includes the latest amendments also, then it will be very difficult for you, I am telling you. So please be with me, be in the class. If you are having your mobile phones with you, please put your mobile phones in the bags just now. I want all of you with me, present, not just physically but mentally also. So no distractions at all, okay? So I will start with the first chapter. So my target for today I'll start with the first chapter. I'll finish the first chapter, introduction, basic concepts. Okay, no? I want to make a foundation, a little bit foundation with you so that my subsequent chapters are comfortably done with you all. Okay. So, first chapter is introduction and basic concepts, right? No. So, in introduction and basic concepts, see, what is tax? Do I have to tell you anything about that? What is the meaning of tax? There are two types of taxes. Number one, direct tax, indirect tax. What is the difference between direct tax and indirect tax? I mean, you all are grown up. You have already attempted your examination once, yes or no? So I am not here to waste your time for these small petty things. I am here to do some value addition. Because by the time I will be here and when I will be leaving, you will be thanking me. Thank you so much, sir, for visiting Chennai and coming to our batch. That will happen only if I do some value addition, which is helpful for you to crack your examinations. Yes or no? So, first chapter. What is the meaning of tax? I don't want to discuss. Do you have any problem? Yes or no? How many types of taxes are there? Direct tax, indirect tax. What are the differences between these two taxes? I don't want to discuss. Do you have any problem? Sure. Why the government takes the tax from us? What is the constitutional validity, etc.? Bloody, you can read all those things. Okay, no? I am here to do something else. See, I'll tell you, there is the charge of income tax. We are talking about what? Income tax. Students sitting behind, you can see this, no? Okay. Income. Can I say this is a tax on your? Tax on your? Okay. So, you have to pay tax on your income. As per the Income Tax Act 1961. As per the Income Tax Act 1961. So, there has to be a charge. There has to be a charge of income tax on you. So, the charge of income tax is as per section of the Income Tax Act 1961. Now, what this section 4 says? This section 4 says that total income of the previous year of every person shall be charged to tax during the assessment year at prescribed rates. So this is the beginning of the entire pain which you are going through. Section 4. You are not supposed to curse the income tax, you are not supposed to curse the ICI. That why income tax? You are supposed to curse section number 4. Because of this, because of this section number 4, you are learning the entire income tax. Because this is the charging section. This is the section for levy of income tax. This is the section for levy of income tax. So the income tax is a levy. It is a charge. It is a charge on. It is a charge on. No. Charge on total income of. Total income of. But this charge is not created in the previous year. This charge is created in the assessment year. And this charge is at prescribed rates. Yes or no? Now these concepts, you might be aware about these things, no? What is previous year? What is assessment year? Hello? Previous year you know, na? Assessment year. Who is a person? Who is a person? You know, na person. So this chapter is done. No. See, I'll tell you where you all are going wrong. If I ask a question, you are supposed to participate in the discussion. I am not here to only teach. I'm here to interact with you. I told you that I'm your elder brother. Consider me as your elder brother. Interact with me. Okay. If I'm asking you something, please reply. Okay. Tell me what is previous year, what is assessment year. Come on. Any one of you can raise the hand and tell me. Come on. What is previous year? What is assessment year? Yes. Sit down and tell. Assessment year is the year in which we pay tax for the previous year. Yes. Okay. Hmm. Very good. So the explanation given by, what's your good name? Santosh. The explanation given by Santosh. Everyone agree to this, or anyone, any other answer? See, usually what happens, no? If I ask what is previous year, what is assessment year, the students answer, sir, previous year is the year in which the income is earned. Hello? Previous year is the year in which the income is earned. And the assessment year is the year in which the income is assessed. Income is assessed. Tax liability is assessed. Assessed means what? The meaning of assessment means determination, finding out. We find out, we determine that what is my total income, what is my tax liability, how much total income I have earned during the previous year. On that total income, how much is my tax liability? That assessment happens, that determination happens in a year. That year is known as assessment. But that assessment happens for the earlier year. Earlier years are many years. Hello. For example, if I'm saying that I'm standing in 25-26. I'm standing in. So in 25-26, if I will assess the total income for earlier year. I will assess the tax liability of earlier year. That earlier year is known as previous year. Hello, sir. So now tell me now, with regard to this 25-26, whatever year which were before this 25-26, all the years are previous years only, no? Hello. Before 25-26, 24-25 was also there. 23-24 was also there. 22-23 was also there. Sir, 21-22 was also there. All the years prior to 25-26 are all previous years only, no sir? Hello? But with reference to this assessment year, what is the relevant previous year? Which year's income will be assessed in this year? The financial year, which is immediately preceding to your assessment year. Not the preceding years. Immediately preceding year. Yes or no? So that is your previous year. See, if I ask that what is previous year, what is assessment year, okay, define previous year, define assessment year, usually, generally, students answer like this. That, sir, in the previous year is the year, no, in which we earn the income. And sir, the assessment year is the year in which the previous year's total income is determined and the tax liability is determined. Yes or no? Are they correct or wrong? Correct only. But the question which I asked, no, from the point of view of that question, this answer is wrong. I did not ask, what do you do in previous year? and what do you do in assessment year? Did I ask that? Then this should not be the answer. I simply asked, what is previous year? What is assessment year? Define. But instead of giving me the definition, instead of giving me the meaning, you're telling me everything else. Will you get marks or no marks? That is the reason why we don't get marks in the exams, Examiner is asking you something else. You are reading but understanding something else. And when it comes to writing, you're writing altogether something else. The things are not matching. And if the things are not matching, definitely you're not going to get marks. Because see, we are not writing the BCom exams. We are writing professional exam known as CA, Chartered Accountancy. So these exams are so specific, and the examiners will be checking your answer sheets are not any Tom, Dick or Harry. They are chartered accountants. You cannot fool them. Very specific thing is asked. So very specifically you are supposed to understand that what is asked, understand that thing only, and give the answer which they are asking, nothing extra. Understanding? So this much professionalism is required. And as far as law is concerned, auditing is concerned, taxation is concerned, usually students lose marks because of one simple thing. They don't understand the question. So if I ask you, what do you do in the previous year? What do you do in the assessment year? Then the answer was correct. That previous year we earn the income. And assessment year we ascertain, we determine, we assess the total income of the previous year and the tax liability thereon. Yes or no? Then your answer is correct. But if the question is, what is the meaning of previous year and what is the meaning of assessment year? Define. Then the definition is something like that. 2 subsection 9 is there, which defines assessment year. Assessment year. Assessment year means a period of 12 months starting from 1st April every year. So your answer should have been this. Meaning and definition of assessment year. Answer has to be this. But what you wrote in the answer? Assessment year is the year in which the total income of the previous year is determined and the tax liability thereon is calculated. Whatever you have written, does it match with this? So no marks. Very simple. I just gave you an example where you are going wrong. Okay. So read the question, understand and write whatever they are asking. That's it. That thing will be developing in the class. Okay. Don't worry. Now see, assessment year. Can you see the definition? Everyone with me. Assessment year means 12 months starting from. So can I say there is a period of 12 months which starts from 1st April 2025. And if this period is of 12 months, then has to end on 31st March 2000. So this period which starts from 1st April, which is of 12 months, is known as. Now in this assessment year, what you do? Assess, determine, compute your total income and the tax liability thereon. Hello? For which year? For which year? Immediately preceding financial year. And that immediately preceding financial year, my dear friends, is known as previous year. And in that year, you are earning income. By taking those incomes as a base in the assessment year, you compute your total income. Understood? So now tell me, if this is assessment year, every year prior to this was a previous year only. But with reference to this assessment year, what will be my previous year? It will be previous year 24-25, which has to end on 31st March 25. Because if this will end, only then this will start. Yes or no? So definitely it is going to start on 1st April 24 and it will end on. So in your examinations, which you are going to give in the January attempt, okay, no? This previous year and this assessment year is applicable. May 26, previous year assessment year will change. Will remain same for September 26 and January 27. Then after that, May 27, no? Entire Income Tax Act which you are learning right now, gone. New Income Tax Act 2025. Income Tax Act 2025 will be made applicable from May 27 attempt onwards. Meaning that you are learning an old law. Yes, this is an old law now, because with effect from 1st April 26 onwards, that new law, New Income Tax Act is made applicable, which will be asked for the first time in May 27 exam onwards. Getting my point? So, sir, why are we learning this old law right now? Because the institute tells you to learn this. And see, in the new law and in this old law, which you are learning right now, there are no major differences. Only the section numbers and everything has been revamped. And few small things are there. And if you will reach in final CA, no, I'll be there in CA final. And that time we'll be learning what? The New Income Tax Act. Because by the time you'll be reaching your final CNO, till that time, the New Income Tax Act would have been there, and the institute will start asking the questions from the New Income Tax Act. Getting my point? So right now, for our examination purpose, we are supposed to learn whatever things I'm teaching you in the class. No need to do anything else. Yes or no? So tell me, assessment year? Relevant previous year? In the previous year, what you are doing? Come on, tell me. In the previous year, what you are doing? Earning the income. Now, taking these incomes as a base in the assessment year, you are going to compute total. And on this total income, you are supposed to compute tax liability. Yes or no? So, this is the total income for which year? Total income for the previous year. Total income for the previous year. For every person, his total income of the previous year will be charged to tax during the assessment year. Yes or no? Did I use the word tax is paid in the assessment year? I have always said this. Total income is assessed and tax liability determined, meaning the tax is charged. Charging is done in the assessment year. But the payment of income tax, the collection of income tax does not happen in the assessment year. Just imagine, you will keep on earning income for the previous year. The government will keep on looking at you like this. Let this poor fellow earn the income. Let the year get over. No, once the year will get over, no, this guy is very innocent guy. This guy is very honest guy. He will come in the assessment year and he will pay the tax on the entire year's income. This poor fellow will run away with the money. Everyone is not that honest. And just imagine, if they don't collect the taxes in the previous year itself, nobody is honest to pay those taxes to the government in the assessment year. Hello? And from your point of view also, it is bad, no? On your entire year's income, your tax amount will be less or very big amount. Very big amount. On the entire year's income, the tax amount will be a very big amount. And just imagine this big amount, if they are asking at once during the assessment year, will you be able to pay that much huge amount of tax? It will pinch you also. Yes or no? So the tax is not taken or paid in the, it is usually collected from you during the previous year itself in the form of prepaid taxes. What? Meaning that pay as you earn. Pay as you earn. Pay as you earn. Some tax we will take in the form of TDS. Some tax we will take in the form of TCS. And some tax we will take in the form of advance tax. We are not going to wait for the entire year to get over. Keep on earning the income. Out of that income, keep on paying small amount of tax. And now the year is over. In the assessment year, calculate the total income. Calculate the tax on your total income. Now this tax which we are charging in the assessment year, we have already made arrangements that we have collected during the previous year itself in the form of TDS, TCS, advance tax. Yes or no? Now the tax which you have computed, the tax which you have assessed in the assessment year, are you going to pay this tax again? Because this tax or any part out of this, you have already paid during the previous year in the form of TDS, TCS, advance tax. Yes or no? Now, when you will calculate your tax liability in the assessment year, out of this tax liability, whatever prepaid taxes you have paid, reduce that. You are not going to pay them again. Some amount will remain. Very small amount. And even if you run away, no, the government will not lose it. Entire tax liability. Getting my point? Hello, sir. And this small amount of tax will not be a burdensome amount for you also. You can also easily pay this much amount of tax. Hello, sir. Logic or magic? Logic. Understood, no? Now tell me, in the previous year, in the assessment year, you calculated your tax amount. You calculated your amount of tax which you calculated was 2 lakh rupees. Meaning that for the previous year 24-25, whatever total income is calculated, on that total income, your tax liability for that previous year amounts to 2 lakhs. Out of that, you have already paid 1,70,000 in the previous year itself in the form of TDS, TCS, advance tax. Yes or no? So, will you again pay that 1,70,000? So, out of 2 lakhs, reduce 1,70,000. How much remains? That will be the net amount of tax which you have to pay by self-assessing. You are yourself assessing this tax, known as self-assessed tax, that you are supposed to pay in the assessment year. Got it, sir? But is it always necessary that your tax was 2 lakh? Hello? And you have paid 1,70,000 only? Sometimes you can pay more also. You came to know that your tax liability is only 2 lakhs. But during the previous year, TDS, TCS, advance tax, all the prepaid taxes you calculated, you came to know, I have already paid 2,25,000. Meaning the tax liability which you have determined, that entire tax liability you have already paid, no? And on top of that, you have paid some extra tax. How much extra? You are a very rich fellow, no? You will donate that amount to the government, no? Or you will ask that amount back from the government. That is the refund which you are going to get. Claim that amount as a refund. That is the excess tax which you have paid over and above the tax which you were supposed to pay to the government. Yes or no? So this entire thing happens, you know. For this reason only, this entire Income Tax Act is there. How to calculate this total income? While calculating this total income, what all things you are supposed to keep in mind? How to determine the tax liability? What will be the tax rates? How the tax will be collected from you? What are the other miscellaneous matters which can come up, which you have to take care? The law has to be made for that. Yes or no? And this law, which you are going to learn, which you have already learned, is nothing but Income Tax Act 19. This law talks about what? When the income tax will be levied. On what amount the income tax will be levied? Hello? Levy means charge. When the income tax will be charged, on what amount the income tax will be charged, on whom the income tax will be charged. This is the charging section. And now once you fulfill the criteria of the charging section, once you are covered here, what will happen? Now the computation mechanism. How to compute the total income. How to compute the tax on that total income. And after calculating that tax, next provisions will come. Collection of income tax from you in the form of TDS, TCS, advance tax. For all these things, the Income Tax Act is made, which you are going to learn. Getting my point? So, section number 4 talks about charge. Other provisions will talk about computations. Computation means calculations. The salary head is there, house property head is there, PGBP, capital gain, yes or no? So all these provisions are computational provisions. They will tell you how to compute the total income, the value on which the tax has to be charged. Getting my point? How the tax will be computed. So now the computation provisions will come. After the computation provisions, what will come? Collection. That how this tax which you have computed will be collected from you. Getting my point? So all those things. See, this is the basic thing which has to be known as a CA student. Okay. So if you are going to learn this law, what this law talks about? This law talks about LCC. What? LCC. Levy, computation, collection, and other miscellaneous things. Yes or no? So all these things you are going to learn in this entire law, Income Tax Act. Now starting from very basic thing, section number total income of the previous year of every person shall be charged to tax during the at prescribed rates. So did I tell you what is the meaning of previous year? What is the meaning of assessment year? What you do in the previous year, what you do in the assessment year? We all know. In the previous year, we earn the income, and from taking that income as a base, the total income of that previous year is ascertained, determined, computed in the assessment year. Yes or no? Assessment year will come first or previous year will come first? And then which year will come? And you know, this assessment year, this assessment year is assessment year for previous year 24. This itself is a previous year also. This itself is a, you will stop earning the income in this year, or will keep on earning the income. The income which you will be earning in this year will be assessed in the next year. That will be the assessment year 26. And the relevant previous year in that case will be 25, 26. Getting my point? Hello, sir. So previous year assessment year, you know. Okay? Doubts cleared? Speed is okay? Understanding everything? Now pay attention. What is the meaning of person? Come on, tell me. Person. 7 categories. Company, AOP. You have to be very specific. Huh? Yes. No. You have to be very specific. Because see, the term person is there, no? The person is there. That term is defined in assessment, in Income Tax Act. So the definition of person in the Income Tax Act is different as compared to the definition of person which is given in GST law. You cannot apply the same logic of person in the Income Tax Act as well as GST law. Getting my point? So I am talking specifically from the point of view of Income Tax Act. Under the Income Tax Act, under this law, what is the meaning of person? Because till the time I will not define it, no, blunders will happen. For example, this term is not defined in the Income Tax Act. Companies will not pay tax. Firms will not pay tax. AOP, BOIs will not pay tax. Why? Because the charge is on the total income of a person, and they will say, we are not persons. Who is person? Umang sir, person. Hello, Santosh, person. This madam, person. Person means what? Only individuals. So which means that only individuals who are earning income are liable to pay tax. Don't you think others will also be earning the incomes? They should also pay income tax. That is possible only if this word is defined. And under that definition, all the entities are covered who has the capacity to earn income. Because the government's intention is not to take the income tax on the income of individuals only. Government's intention is to take the tax on the income of every entity who has the capacity to earn income. And all those entities who are capable to earn the income are covered in the definition of person. And they are 7 categories, 7 type of entities. And in that same order you are supposed to remember. Number 1, individuals. Number 1, number 2, HUF. Number 3, companies. Number 3, number 4, firms. And wherever the word firm is written, no, it always includes LLPs also, until and unless specifically excluded. Yes or no? So wherever the firm word will be used under the Income Tax Act, it automatically, it by default includes LLPs also, limited liability partnerships also. Yes or no? Then AOP is there, BOI is there, then local authority is there, and the person, the entity which is not covered in category 1 to category 6, all those are known as AJPs, artificial juridical person. Yes or no? Now see, individual is a person, HUF is a company, person, firm, person, AOPBI, person, local authority, person, AJP. Total income of the previous year of every person shall be charged to tax. Getting my point? So, individuals liable to pay income tax or not liable to pay? Firms liable to pay income tax, not liable to pay? Companies? AOPBI? Understood, no? Are you an individual? Tell me yes or no? Are you an individual? Liable to pay tax. You pay income tax. Do you pay income tax? Anyone out of you paying income tax? But sir, we are individual. Individual means we are, charge is on you also. But charge is not on you. Charge is on your total income of the previous year. For that you must earn income also. Are you earning income? So even if you are a person, not liable to pay income tax, because just becoming a person, you don't become liable to pay tax. If you are a person earning income, from that income compute total income. On that total income the charge is there. Bloody, you are not earning income. So will you be calculating total income? No, your total income will be nil. Is there any charge on you? No. Hence, even if you are a person, even if charge is on person, even if you are a person, you don't pay income tax. Understanding? Tell me about myself. I am an individual. Am I liable to pay income tax? Seriously? How come? Earning income? Yes, obviously. I have my own practice. From my practice, I'm earning income. Coming here, teaching you all. From this teaching, teaching assignments also I'm earning remuneration. I have properties which I have given on rent. So the rental income also I'm earning. I have some assets which I have just now sold. Just an example, I have bank accounts. On my bank account, interest, etc. is coming. So am I a person? Yes. Earning income? Yes. Then only I'll be liable to pay income tax. No. Hello. So, number one, did you understand the meaning of person? Who is a person? Individual, HUF, company, partnership firms, including LLP, AOP, BOI, local authority and AJP. All these entities are person. Just because you are a person, you will not be liable to pay income tax. You will be liable to pay income tax only if you are earning income and you are liable to calculate the total income. Yes or no? So, now once you are a person, then the income tax can be levied on you, on your total income. And if the income tax is payable by you, if the income tax is payable by any person or any other sum as per the Income Tax Act is payable, any other sum means what? Penalty, fine, interest, they are known as other sums. So as per the Income Tax Act, income tax is payable, or as per the provisions of Income Tax Act, any other sum may also be payable by the person. Then that person will be treated as assessee. Then that person will be treated as. So, in order to become an assessee, you must be a person first. If you are a person, only then you can become an assessee, and only then you can be made liable to pay tax or other sums as per the Income Tax Act. Getting my point? So every assessee must be a person, but it is not necessary that every person must be an assessee. Understood? So who is a person, who is an assessee? Did you understand? No? Hello? What is previous year, what is assessment year also you understood? Now, my simple question, and give me the answer of that question also. You're not supposed to write down anything. If you want to write, I'll tell you what to write, what not to write, okay, no? And I'll give you the handwritten notes also, which you can go home and revise the things from. Just focus, and whenever there will be something to write, I'll tell you, okay? But till that time, be with me and try to participate in the discussion. This was the basic part which I have just now done, okay? Tell me, anything new came to your notice? Yes, the process. Yes or no? What happens in the previous year? What happens in the assessment year? Okay, these small value additions I'm there to do, okay? Because it can lead you to score good marks in the examinations. Now pay attention. If I tell you that in the assessment year 25, 26, if I'm standing here, no, means that I'm standing in the assessment year. And if I'll move this side, no, I'm standing in the previous year. Understanding? Where am I right now? And where I am right now? So in the assessment year, what is going to happen? Come on, tell me. What we are going to do in the assessment year? Are you a person? Are you a person? So person, what you are going to do in the assessment year? Assess, compute your total income. Yes or no? And on that total income, you are supposed to compute the tax liability. That is your first question in the examination. Hello. Computation of total income and tax liability in this assessment year for previous year 24, 25. Yes or no? Now, standing here I have to compute the total income of the previous year. So for that, I will have to look forward or I will have to look backward. Backward. So I will have to check that starting from 1st April 2024 till 31st March 2025, what all things I have already done. Yes or no? What all incomes I have already earned. By taking those incomes as a base, I will be calculating my total income in this year. Hello? So the first starting point will be here to calculate the total income and the tax liability later on. The first starting point here will be what? Starting from 1st April 2024 till 31st March 2025. What was my receipts? What were my? Did I say income or I said receipts? First of all, you'll have to identify the receipts. So identify the. Now tell me. Receipts means coming to me or going from me. Something which comes in can only be treated as income. And we are learning income tax. Tax on income. Income will be from these receipts only. So my complete focus, my target should be on receipts. What are my receipts during the previous year? Starting from 1st April to 31st March. Now tell me, what types of receipts you all know? Receipts can be of two types. Whatever receipts happen to me can either be revenue receipts or capital receipts. Revenue or? What is the meaning of revenue receipts? There is some regularity. Again and again. Repetitively. Coming from a definite source. So if there is some receipt which I can identify during the previous year. There are some receipts which are coming to me on a regular basis, repetitive basis from a definite source. All those receipts are revenue receipts. Best example, salary, rent, hello, interest. All these receipts are repeatedly coming. I'm doing a business. Customer coming, buying the things, giving me money. Again another customer coming, buying the things, giving me money. Hello? Revenue receipts. Getting my point? So under the Income Tax Act, whatever receipts are happening, out of them, if revenue receipts are there, revenue receipts are always considered as income. Revenue receipts are and they are taxable also until and unless specifically exempted. So during the previous year, whatever revenue receipts are there, I will have to identify all the revenue receipts. Like rent is there, salary is there, yes or no, interest etc. is there, business receipts are there. I will identify all those receipts. Now those receipts which are revenue receipts will be treated as my income. Will be treated as my income, and they are liable for income tax also. Income tax has to be charged on them until and unless specifically exempted. Will you remember this? Sure, sir. Now, during the previous year, don't you think that certain receipts would be capital in nature? Capital receipts also. Meaning that those receipts have just happened for the first time in the previous year. Prior to that, or after this, I might not have got such kind of receipts. There is no regularity. There is no repetitiveness. Yes or no? May or may not happen. And after they happen, only then I come to know that from which source they are coming. Prior to that, I was not aware only. Hello, sir. Few examples. Sale of assets. Then gift. Then compensations. Any asset I am selling, do I sell the assets every month or sometimes? Gold sold or some buildings etc. I am selling. Hello? some properties, etc. I'm selling the shares, etc. So these assets which I am having, I can sell the assets. Now these type of sale transactions I don't do on a regular basis, on a repetitive basis. It might have happened for the first time. Yes or no? So sale of asset, will I get some money? Is it a receipt? Revenue or capital? Capital receipt. My birthday was there. Somebody came in my birthday, some friends or relatives. They gave some gifts, cash gifts, full money. Can I get gifts on different occasions? Yes or no? But those gifts are also not on regular basis. No, hello. I may or may not get it. Getting my point? So gifts are also capital receipt. Compensations also I might get. Yes or no? So there are many receipts which can happen. So you have to ask yourself, what were my receipts? The first starting point for the calculation is, what were my receipts during the previous year, 24-25. Some receipts will be revenue, always my income. Hello. Until and unless specifically exempted, they will be taxable under the Income Tax Act. Yes or no? Now some receipts during the previous year will be capital receipts. What type of receipts? So now these capital receipts which are happening to me, they are not happening on a regular basis. Okay. So under the Income Tax Act, under the capital receipts are usually not treated as income. What did I say? Usually. Did I say always or usually? Usually capital receipts are not treated as income until and unless specifically defined as income. So under the Income Tax Act, there is a definition which is given in section 2 subsection 24. This is the definition of the term income. Definition of the term. The term income is defined in section 224. What is the need for them to define income? Simple. Revenue receipts are income only. No need to put the revenue receipts in the definition, because nobody can deny that it is not my income. Hello? Getting my point? So revenue receipts are income. But sometimes the capital receipts which are not your income, but the government wish to charge tax on those capital receipts. First of all, the government will have to consider those capital receipts as your income. Only then they can be made liable for income tax. Getting my point? Understanding? So this 224 is the definition of income. List is given. Point number 1, point number 2, point number 3. Big list is given. In this list, if you find any type of receipt which usually is not an income, and if that receipt is covered under the definition of income, even that will be liable for income tax. And usually your capital receipts are considered as your income under section 224. Getting my point? But what if any capital receipt is there, hello, and not considered as income? Under the Income Tax Act, nowhere it is written that this capital receipt is your income. Then it is not your income. Hello? Not liable to pay any tax on that. Got it, sir? Hello? So now identification part done. Receipts. Out of these receipts, some receipts are revenue receipts, some receipts are, and out of these revenue and capital receipts, now I will classify. Some receipts will be treated as my income. All the revenue receipts, hello, and also those capital receipts which are covered as income. Yes or no? They will be covered as my income. And some receipts which will not be treated as my income only. Okay? This basic understanding has to be there. that out of those receipts, which receipts I will cover as my income and which receipts I will ignore because they are not incomes as per Income Tax Act. Got it? So, will I focus on this or I will have to focus on this? I will only focus on those receipts which are incomes. Yes or no? Now, under the Income Tax Act, no, government is very kind. Government does not wish to charge tax on all your incomes. Few incomes, no, government has exempted. Even though it is your income. See, it is your income. But we are being kind to you. Don't pay any tax on this income. We don't want to charge any tax on these incomes. No need to include these incomes in the computation of your total income. Because if it will go in the computation of your total income, tax will be charged. Hello? So the incomes which are not to be included in the computation of your total income by way of exemption are known as exempt incomes. Okay, so out of these incomes, there are some incomes which will be exempt, and normally the exempt incomes are given under section 10 of the Income Tax Act. Section number 10 specifically talks about those incomes which are not to be included in the computation of your total income because these incomes are known as exempt income. Government does not wish to charge any tax on these incomes. Yes or no? So forget about these. But you'll have to remember that, okay, out of these receipts are my incomes. Now out of these incomes, you'll have to remember section number 10. This income is exempt. This income is exempt. This income is exempt. For that, you'll have to learn section number 10. Hello, sir. Now, the incomes which are not covered in the exemption, they are incomes, but not covered in the, meaning the government wants to charge tax on those incomes. So those incomes are known as taxable incomes. Those incomes are known as. So your focus should be on only those receipts of the previous year which are incomes and which are taxable. Identification. Done. Now these taxable incomes, these will only be included to calculate your total income, or they might not be included to compute your total. It is not necessary that all the taxable incomes which you are earning, all the incomes will be included in the computation of your total income. Some incomes will not be included in the computation of your total income, even if they are taxable. Why? Because they are not covered in your scope. Chapter number 2. Scope of total income. In your total income calculation, in my total income calculation, which taxable income will come and which taxable income will not come. Scope of the total income depends on two things. Depends on number 1, residential status, and number 2, nature of that income, whether that income is Indian income or foreign income. Based on these two things, it will be decided that whether this taxable income is to be included in the computation of total income or not to be included in the computation of total income. Yes or no? So these taxable incomes to be included in what? Computation of what? Computation of what? Total income. To be included No, no, no. Not to be included. Yes, yes, yes. To be included. Either it will be included or it will not be included. Depends on two things. Number one, residential status of assessee and and nature of that income. Yes or no? Based on these two things, it will be decided. That we are going to learn in the second chapter, residential status and scope of total income. Okay, no? Now, based on these two things, if I come to know that, okay, the income is to be included, all the taxable incomes are to be included or some incomes will be included? What about the other incomes? Even if they are taxable, but based on your residential status and based on the nature of that income, for you, that income is not includable in the computation of your total income. Got it? Forget it. You forget it. You take only these incomes. Now, these incomes which you have taken will be classified. Will be in 5 heads of income. 5. First head, salaries. Second head, house property. Third one, PGBP. Fourth one, capital gains. Next one, income from other sources. Yes or no? See, in these 5 heads, no, once you come to know that your receipt, which is your income and which is taxable and covered in your scope, only these incomes are classified under 5 heads. Done, no? Now, if these incomes are to be classified under 5 heads, few incomes will go to capital gains. And from by taking those incomes under the capital gain head, the income of capital gain head will be computed. Yes or no? Take these incomes under capital gains, apply the capital gain provision, take the deduction available under capital gains head and calculate the capital gains. Out of these incomes, few incomes will come in PGBP. Take these incomes in the PGBP head, apply the PGBP computation provision, deduction etc. available under PGBP head and compute the PGBP head, income of PGBP head. Likewise, salaries. Likewise, house property. Likewise, now you have computed after classifying your taxable income into 5 heads, applying the computational provisions of each head, taking the deductions available under each head. Out of those incomes, you have computed the income of each head. Yes or no? Now, if these 5 heads of income you have computed, hello, you'll have to aggregate. But while aggregating this amount, you are supposed to apply clubbing provisions and set off and carry forward provisions while aggregating these 5 heads of income. Yes or no? So, while doing the total, if clubbing provisions are applicable, also consider the clubbing provisions. Set off and carry forward provisions also consider while aggregating. Yes or no? And then an amount will come. That will be gross total income. Did you understand this? Hello? Income tax is a charge on total income or gross total income? Income tax will be charged on this amount. Out of this, take deductions, which we will separately allow from your gross total income under chapter 6A, starting from ATC to ATU. These deductions, if you will take, yes or no, then a final amount will come. And that amount, my dear friends, is known as total income. Yes or no? Understood this entire process? In your examination, the first question, this entire process you have to follow. And this is nothing but your CA intermediate syllabus. First chapter we are doing, no? Making our base to learn the other things. The base is required. Introduction and basic concept. First chapter is going on. Second chapter, scope of total income. Out of these taxable incomes, which incomes will come in the computation, which incomes will not come in the computation? Yes or no? Depends on two things, your residential status and nature. This thing you will learn in second chapter. Third chapter, salary. Fourth chapter, fifth chapter, next chapter, next chapter, next chapter, next chapter, next chapter. After completing deductions, after completing these many chapters, remembering everything in your mind, then only you will be in a position to calculate question number 1. Now this is not the end, my dear friends. From here also you are supposed to move ahead. Because see, as per section 4, as per section, the total income of the previous year of every person shall be charged during the at the rates of tax cannot be applied on any amount other than this. So if you want to apply the tax rate to calculate the income tax, first you will have to calculate this value. Because tax, we all know what is tax. Amount of tax is the function of two things, two variables, some value and some rate. Value multiplied by rate will give you the tax amount. Hello? Value multiplied by rate will give you tax amount. So under the Income Tax Act, what is the value on which the rate will be applied? Getting my point? And on this, what will be the rate? Those rates are prescribed. Understood? So first of all, no, I want all of you to write down this entire process. Getting my point? This entire process. But wait, this, in the assessment year, the total income is what? Total income assessed. Assessed or computed. This happened. This is assessed or computed. But this total income for which year? For previous year. 24, 25. This happened in which year? Assessment year. By taking the receipts of previous year. 24, 25. Copy this. Do it fast. This part is done, no? This part. Do it fast, guys. Done. Now pay attention. See what I have calculated. Total income, no? From that total income only I am starting. Okay, no? What will happen after total income? See the total income which you have calculated, computed. This total income, on this total income you are supposed to apply the tax rate. What are the tax rates you know? Slab rates. Okay, no? Forget about everything. Okay? Whatever I am telling you, remember that thing properly. Please be attentive. Now in your total income, when you will calculate your total income, no? Out of your total income, in your total income, there might be some special incomes. Which incomes? Special incomes. Sir, example of special incomes. Example of special incomes. Winnings. Which income I am talking? Winnings income. And that winnings income, as per section 115 BB or 115 BBJ, if the winnings is winnings from online games, then winnings from online games are covered in 115 BBJ. Yes or no? All the other winnings are covered in 115 BB. 115 BB. Then you must have heard about this income. Have you heard about it? Long term. And these long term capital gains are of two types. Long term capital gain under section 112 is also there, and under section 112A is also there. Yes or no? Now under section 112A, please focus. Then after long term capital gain, short term capital gain is also there under section 111A. And you must have heard about unexplained incomes. Have you? Unexplained incomes, which are covered under section 115 BBE. Now, what do I mean to say? That whenever you will calculate your total income, no? So while calculating your total income, in the calculation, you might have shown these incomes also as a part of your total income. So in the total income, these incomes are already included. So from your total income, exclude all these incomes. From your total income, take these incomes separately. They are known as special incomes. On these incomes, the tax rates are given under the Income Tax Act itself under these sections. So in your total income, whatever winnings income you have shown, separate that winnings income, because as per 115BB or 115BBJ, on your winnings income, you are liable to pay how much tax? 30%. This is the rate prescribed on this income. Any assessee earning this income, any assessee means any assessee, individual, HUF, company, firm, we don't care. Are you earning winnings income? Out of your total income, separate your winnings income. On that winnings income, we want 30% tax. Who will pay 30%? Only individuals or all assessees? All us. So these rates which I am going to tell you right now are not assessee specific rates. Assessee to assessee, these rates will not change, will remain same. Any type of assessee earning these incomes have to pay this much tax on these income. Yes or no? So winnings income as per 115BB or BBJ, how much? 30%. LTCG, if covered by 112, if covered by, is taxable at the rate of 20%. But now this rate has been reduced and now it has become 12.5%. Because this year amendment has come. You must be aware about that. That if the assets are transferred, long-term assets are transferred prior to 23rd July 2024, then indexation will also be available and the long-term gain, resulting long-term gain will be taxable at 20%. But if the assets are transferred on or after 23rd July 2024, now the capital gain, long-term gain will be computed, but without taking indexation. And the rate will be reduced to 12.5%. In capital gain, we are going to discuss in detail. Don't worry. Okay, now, right now, I'm concerned about the tax rates. So this is the rate. Either 20% rate will come or 12.5%. If the long-term capital gain is covered under section 112A, any long-term capital gain covered under 112A, if the transfer was made prior to 23rd July, up to 1 lakh, no tax. Up to 1 lakh, no tax. But over and above 1 lakh, excess amount, taxable at what rate? 10%. 10% rate was there. Yes or no? But if the long-term gain is covered by 112A, asset was transferred on or after 23rd July 2024. Hello? Then up to 1,25,000, the long-term gain will not be taxable. And any amount over and above 1.25 lakhs, excess amount will now be taxable at a rate of 12.5%. So what they have done, they have increased the rate of tax here. But to compensate for that, they have increased the limit also. From 1 lakh, the limit has been increased to 1,25,000. Up to 1,25,000 of long-term gain under section 112A will not be taxable. Any long-term capital gain over and above 1.25 lakhs will be taxable, but now it will not be taxable at 10%, it will be taxable at 12.5%. Yes or no? In detail, we are going to discuss about this. Don't worry. Okay, no? Now tell me, short-term capital gain under section 111A. Earlier, it was taxable at 15%. Earlier, it was taxable at, but now the rate has been increased to 20%. Rate has been increased to 20%. So, if the transfer was prior to 23rd July, then 15%. But if the transfer is on or after 23rd July, then the rate is 20%. Will you remember this? Unexplained incomes, which are covered in 68 to 69D. Unexplained incomes are there, okay, no? Cash credits, then unexplained money, unexplained investments, etc. All those incomes which are covered in 68 to 69D. All those incomes will be covered under section 115 BBE and taxable at a flat rate of 60%. How much? But on that 60%, 12% surcharge is also there and 4% cess is also there. So in all the taxes taken together, including surcharge and everything, it results to 78%. So what is the basic rate of tax? It is 60. But with surcharge and cess, it will become 78%. Getting my point? So these are the tax rates. Will you remember these tax rates? Winnings, LTCG 112. Hello, either 20 or 12.5. Depends that when the asset was transferred. Okay. Then LTCG 112A, nil and excess amount 10% or 12.5. STCG either 15% or 20%. And unexplained incomes 60%. Yes or no? So from your total income, no, you are supposed to calculate the tax on these incomes separately. So whatever type of assessee you are, all the assessees will pay this much amount of tax on these special income. There are other special incomes also. Many special incomes are there, okay, no? But all those things you are going to learn in finals. As far as inter-CA is concerned, you are supposed to remember only these rates. Will you remember this? Now, will your total income have only these incomes or other incomes also? So can I say, from my total income, whatever balance remains, known as balance total income. Now this balance total income is also known as normal total income. Anything other than special is normal only, no? So other than special, the balance part of your total income is normal total income. On this normal total income, we are going to apply. On special income, special rates are applied. Can you see? Hello? So on normal, what rates will be applied? Normal rates, normal tax rates. On special income, special tax rates. On normal income, normal tax rates. Yes or no? Special income, special tax rates are available in the Income Tax Act itself. Hello? Under the different provisions of Income Tax Act only, these rates are mentioned. But these normal rates are nowhere available in the Income Tax Act. Income Tax Act does not speak anything about these tax rates. So these tax rates keep on changing every year. Hello, you are going to take these tax rates from Finance Act. And my dear friends, the Finance Act applicable for you is still 24. Hello? So these rates are known to you. Now these rates are to be applied on your normal income. Hello? Different rates. Normal rates are different for different types of assessees. For individual, will you calculate total income? Hello? Calculate the total income of individual. Special income taxable at these rates only. But for balance income of individuals, the rates are different. Might be for company, the same rates will not be there. Hello? Partnership firm, the same rates will not be there. So these rates will keep on changing depending on the type of assessee. Assessee to assessee, these rates will change. Assessee specific rates. What? Assessee specific rates. Now what will happen, Now on these special incomes, I have applied the special rates. A tax amount will be calculated. Tax 1, can I say? This is my tax 1. So this tax is on my special incomes. Yes or no? On this normal income, by applying these rates, I will calculate tax 2. second amount of tax. This tax plus this tax will give me total tax. On my total income, some income, this much tax, some income, this much tax, both the taxes taken together, can I say this is the total tax on my total income? Tax on total income. So now I will write down tax on total income. What is tax on total income? Tax 1 plus tax 2. Tax on special income plus tax on normal income. Yes or no? This is known as basic amount of tax. Minimum, this much you have to pay. Minimum, this much you have to. But if you are very rich, super rich, then we will ask some more tax from you. This is not enough. We'll ask some more tax in the form of surcharge. So will you pay surcharge also? Yes. Including this surcharge also you'll have to pay. Yes or no? So if the surcharge gets applicable, then along with this you will pay surcharge. So you will add surcharge or you will less surcharge? Add. So you will add surcharge at a certain rate, and this rate is applied on this amount. Meaning on this tax also the surcharge rate is same, and on this tax also the surcharge rate is same. So on this entire amount you apply the same rate of surcharge. No? Hello sir. So surcharge will always be at a certain rate, and this rate is always applied on the amount of tax. Here what mistake happens, from many students? Unfortunately, they apply this surcharge rate on the amount of gone. Surcharge is never on total income. Surcharge is always on tax. It is a tax on your basic amount of tax. Yes or no? So always apply this rate on the amount of tax. So will you calculate your surcharge amount? Yes. Now sir, when surcharge is applicable, how much rate of surcharge is there? Wait, no. I'll tell you. But right now, process is more important. Yes or no? If this process you will keep in mind, no, you will never go wrong. And today itself I am telling you, by heart this entire process. It should be stuck in your mind. From anywhere, if I'll tell you, no, we are learning a particular chapter. If I'll ask you that this chapter is from which part of the process, you should be identifying that part. That okay, this chapter which we are doing, no, this chapter falls in this part of the process. This is the fourth point in the process. So we have done first 3 parts of the process. Now the fourth part of the process is going on, which we are learning as a chapter. You should be absolutely aware about this. And please don't try to shuffle the things. Remember the things in the exact same order in which I have given you. Okay? But please try to, by heart this process. There is nothing else which is going to come beyond this. Everything will be in this process only. Now small part of this entire process will be picking up as a chapters, will picking up as our discussion, and this entire process is over, the syllabus will be over. Getting my point? So now tell me, the surcharge will be included. So tax including surcharge will come. Tax including surcharge will come. Yes or no? But sometimes people are not very rich. People are very poor. So from poor people, the government will take more tax or government will give discount in tax. That is known as rebate. That is known as. So in tax, some extra amount will also be taken, or from your tax, some rebate can also be allowed. So from tax, the rebate will be added or rebate will be reduced. less what? Rebate. And that rebate is given under section 87A. Yes or no? Now, in one case, surcharge is coming, then forget about rebate. Rebate will never come because surcharge is there. Hello? But if rebate is there, then forget about surcharge. Hello? Both things will not come together. Either surcharge will be there or rebate will be there. Or rebate will be there. Or nothing will be there. Tax including surcharge can be paid, or tax after rebate can also be paid. Getting my point? What is the rate of surcharge? In what cases the surcharge will be applicable? Those things I am yet to discuss. Don't worry about that. Okay, no? Rebate. How much rebate you will get? Who will get the rebate? Everything I am supposed to discuss. Don't worry. Right now, understand this entire process. Okay. Now, tax including surcharge. So, tax on total income including surcharge will come. Or tax on total income after rebate will come. Either this or this. Any one. Okay. Now whatever tax you have calculated, whether it is including surcharge or after rebate, on that you are supposed to give a dowry on the name of health and education cess at the rate of 4%. 4% of this amount. Tax including surcharge, on that apply 4%. Or tax after rebate, on that amount you are supposed to apply 4%. Yes or no? So now this 4% will be your cess. Okay. So now you will get gross tax liability. This is your gross tax liability. On this total income of previous year 24-25. This is the total income of previous year. What is the total amount of tax you are liable to pay? This much. Understanding? Yes or no? Now this tax you came to know in the assessment year. This much tax will be charged. During the assessment year, this much tax is going to be charged. Are you going to pay the entire tax which is charged? Or out of this, some tax you have already paid during the previous year in the form of TDS, TCS, advance tax. We call them prepaid taxes. Yes or no? So less what? Less prepaid taxes. Prepaid taxes includes TDS, TCS, advance tax which you have paid during the previous year itself. You will reduce. Now after reducing this, no, either the final amount will be positive or the final amount can be negative. If it is positive, no, that means this much tax was there. You have paid less as prepaid tax. Some more tax is to be paid. Net tax liability. Net tax liability. Yes or no? And if this tax is lower amount and the prepaid taxes were more, meaning the entire tax you have paid, but over and above that you have paid some extra. That is your refund due. Will you remember this? So either you will get a positive amount, that is your net tax liability, or you will get a negative amount which will be known as refund due. Now when you will pay this net tax? When the government will ask you to pay this net amount of tax? Assessment year. Because this entire calculation happened in the assessment year. No, in the assessment year only you came to know what? How much balance amount of tax is yet to be paid. So this will be paid in the assessment year. And the refund will also be claimed by you in the assessment year. Getting my point? This entire process will you remember? Okay. Now this is the basic process. Please, requesting you, don't shuffle the things. Sir, I don't like rebate to be taken here. I want to take rebate in the end. Gone. From marks, there will be no marks. Sir, surcharge, no, in the end only, last we will do surcharge, sir. Net tax liability, no, that time we'll add surcharge. Oh, sorry, sir, I forgot to add surcharge in the beginning, sir. Gone. Whatever things I have written, exactly same place, you are supposed to remember. Don't shuffle. Getting my point? By heart this entire process. Okay. Now pay attention. Wait. One more simple thing I would like to tell you. What is this? Total. What is this? Or refund? Yes or no? This amount. So for this, there is a section 288B. And for this, there is a section 288A. If your total income or your net tax liability or refund amount is not in the multiples of rupees 10, then you will have to round off the amount of total income as well as your net tax liability or refund. You will have to round it off to the nearest multiple of rupees 10 as per 288A, as per 288B. Okay, no? So, if for example, the amount was 2,91,152, either your total income or tax liability, any amount, the logic remains same. Tell me, is it in the multiples of rupees 10? This amount, total income or tax or refund, it is not in the multiples of. So you'll have to round it off to the nearest multiple of rupees 10. So, see sir, it can be written as 2,91,150 also, because this is the multiple of rupees 10, and it can be written as 2,91,160 also, because this is also a multiple of rupees 10. Now you'll have to identify which is the nearest multiple of rupees 10 from this amount. See, if you are standing at 2,91,152, going 2 steps back will bring you to 2,91,150. Going 2 steps back. And if you are standing at 291,152, to reach 2,91,160, you will have to walk 8 steps. Going 8 steps ahead is nearest, or going 2 steps behind is nearest. Round off to 150. This is the nearest multiple of rupees 10. Getting my point? What if this was? Then the nearest multiple will be 60. 3 steps ahead is better than going 7 steps backward. Getting my point? I know what is your doubt. Sir, 5 steps ahead or 5 steps behind, back, both are near only. Life moves, everything moves forward, time moves forward. So, always the forward movement has to be taken. Yes or no? So, if the last digit happens to be 5, last digit you will check, last digit. If last digit is 5 or more, 5 or round it off to the next higher multiple. Yes or no? And if the last digit is less than 5, less than, then round it off to the previous lower multiple. Getting my point? Will you remember? If you do the entire question correctly, not a single mistake, 15 on 15 you were supposed to get. But the examiner can still deduct 2 marks. 1 mark because you did not round off total income, and 1 mark because you did not round off tax liability. And usually, whenever the questions are comparatively easier, no? Hello? Whenever few students are getting full marks, no? Examiner becomes choosy and he tries to deduct your marks in these ways. 288A, 288B, did you round off? No. You were supposed to round off. Gone, 2 marks gone. Just because you did not round off, you did not get 15 on 15. One of my students got best paper award, taxation, CA intermediate, rank 3. She lost 2 marks because of this mistake. She scored 93 in taxation, both DT, IDT combined. 93 marks. Best paper award from CA Institute. But 2 marks, when she brought her this answer sheet, no, she saw that's a 2 marks I wasted because those 2 marks were spoiled because of these silly rounding off mistake. And just imagine, I am not talking about the best paper award. I am talking about the situation where you pass or you fail. Even a single mark no here and there will make a big difference. 1 mark here, 39, gone. 1 mark here, 40, pass. Or 1 mark over and above 59, you get exemption. For each and every mark, you are supposed to fight with the ICA. See, I'll tell you about myself. In my entire CA career as a student, I'm a CS also, I have never attempted a 100 marks paper. That is not my suggestion to you, I am telling you. I would never want you to do that. Because the kind of confidence which I had as a student was different confidence. Whatever I will attempt will be next to perfect. That was my level of confidence as a student. Otherwise, I will not write only. Every paper which I have attempted as a student, either it is 75 or maximum 85. Never attempted a single paper in my career for 100 marks. And still I am a chartered accountant standing in front of you. Why? Because whatever I used to attempt was bang on target. If I have attempted 70 marks, I am damn sure, I am confirm that out of 80 marks which I have attempted, if I am attempting 80 marks, I am damn sure that at least 75 is there. And usually the marks were also like that. Only 2-5 marks difference used to be there. So your perfection should be at that level. And when it reaches to that level, it requires practice, which you all are missing. If you have studied everything 2 or 3 times, first you have studied everything in the class. Second, on your own at home while preparing for tests and all. Yes or no? Third time at the time of examination. Bloody what you have done, you have just studied everything. 3 times you study or 30 times you study the same thing is not going to produce results for you. Ultimately, whatever will be written on your answer sheet, your examiner is going to look at that. And if you are not practicing to, showcase that what you are going to write in your answer sheet, you are never going to get marks in your exams. Because your writing practice is not there. So don't run away, because that is the only thing which is going to give marks. And knowing that if you are running and revising everything again and not practicing is again producing the same results. Getting my point? So today when you will go home, I'll provide these notes to you. Okay. Go home, read these notes super fast. You're not supposed to waste your time because everything we are doing in the class. Your time should be invested in solving the questions which we have done in the class. Few questions I'm going to give as homeworks. Yes or no? Today you are going to get some questions. But whenever I'll come to the computation of total income part, no, many questions will solve together to have that idea that what exactly the things are, how we are going to approach. Getting my point? So that will give you confidence. So today itself, finish these two chapters which we are going to finish today. Then later on, we don't have time to do those things again because the exams are very near. Okay, no? So, are you comfortable with this entire part? Understood everything? I want all of you to copy this part. After total income, just below the total income calculation, start copying from this part. Ah. Done. Still writing. Okay, see now. Now, these special rates which are there, okay, no? We'll be doing IFOS, income from other sources. Winnings will come there, and unexplained incomes will also come under the IFOS head. Yes or no? Then we'll be doing capital gains. In capital gains, you are going to learn long-term capital gain, short-term capital gain and all. Yes or no? So that time, these things will again come in front of you. So right now, I am not bothered about these tax rates and these type of incomes. We are going to get a discussion, proper discussion about these things later on. Right now, we are concerned about this. What is this? Balance total income. And on your balance total income, what tax rates are applicable? What tax rates are applicable? Those tax rates are normal tax rates. Which tax rates? Normal tax rates. Now pay attention, very important thing. See, our discussion is about normal tax rates. Now normal tax rates for individuals, HUF, AOP and BOI, and then AJP. AOPs other than cooperative societies. See, cooperative societies are also AOPs. Okay, no? But for cooperative society, separate tax rates are there. Hello? So I am talking about all the AOPs other than cooperative societies. Yes or no? Why? Because for cooperative society, different tax rates are there. Okay? So now, how many persons were there? 7. Out of 7, I have covered 4. Individual, HUF, AOPBY, AJP. Okay, no? For them, what will be the tax rates? What will be the? If the assessee is individual, HUF, AOPBY, AJP. Meaning this total income is calculated for individual, HUF, AOPBY and AJP. So out of this total income, on special income, everyone will pay this tax only. Hello? But for these persons, their balance total income is taxable at slab rates. This slab rate you will apply on the entire total income, no? Or only the balance part of total income? Yes or no? Normal rate on the normal total income for these assessees is given in slabs. Hence, these rates are known as slab rates. Understanding or not? Slab rates are different, sir. Slab rates are different. For them, if they are covered by the default tax scheme of 115 BSE, then their slab rates are different. But if they are not covered by default tax scheme, they are shifting out of default tax scheme. Meaning they are going for optional tax scheme. Shifting out of 115 BSE. Yes or no? Then for them the slab rates are different. Getting my point? So 115 BAC cross. Tick means what? They are in the default tax scheme. 115 BAC cross means shifting out of default tax scheme. They are in the optional tax scheme. Yes or no? So this is what? This is default. And this is optional. Now under the optional tax scheme, up to 2,50,000, you are not supposed to pay any tax. 2.5 lakhs to 5 lakhs on this slab of 2,50,000. Yes or no? 2.5 to 5 lakh. How much is the difference? So this is a slab of 2 lakh. First slab of 2,50,000, no tax. Second slab of 2,50,000, meaning starting from 2,50,000 to 5 lakh, the tax rate is 5%. Then next slab is 5 lakhs to. Now this is the difference of 5 lakh. This slab of 5 lakhs will be taxable at 20%. And anything over and above 10 lakh will be taxable at 30%. Are you all aware about these tax rates? Hello? These tax rates will be applicable only if you shift out of the default tax scheme. You come out and follow the optional. But if you don't shift out, you remain in 115 BSE, then compared to this, the tax rates are concessional. Concessional means beneficial tax rates. Your tax amount will be less if you calculate the tax based on these tax rates. Yes or no? So what are the optional tax, what are the default tax rates? Up to 3 lakhs. Will there be any tax? No. Then 3 lakh to 7 lakh. This is a slab of 4 lakh rupees. Yes or no? On that you are going to pay 5%. Then 7 lakh to 10 lakh. You are going to pay 10%. Then 10 lakh to 12 lakh. This slab of 2 lakhs will be taxable at the rate of 15%. Then 12 lakh to 15 lakhs. This slab will be 20%. And now anything over and above 15 lakhs will be taxable at 30%. Remember, there is no 25% slab here. Huh? Hello, sir. Now see, compared to these tax rates, these are attractive. Why? Because see, here up to 5 lakhs you are supposed to pay how much? Here up to 7 lakh you are supposed to pay. Meaning, anything over and above 5, anything over and above up to 10 is taxable at what rate? See here, anything over and above 5 up to 7, meaning 2 lakhs. How much? And if that same thing was there in the optional, how much tax you would have paid? But how much you are actually paying? So there is a savings of 15% tax. Getting my point? Now tell me, 7 lakh to 7 lakh to, can you see anything over and above 5 up to 10 is taxable at what? So on this 3 lakh, how much tax you would have paid? But how much you are actually paying? So there is a savings of 10% here also. Getting my point? So likewise, up to 15 lakhs, there will be savings. Here the savings is 15%. Here the savings is 10%. Here again the savings will be 10%. See, up over, sorry, 15%. Because from 10 to 12, the rate is, and anything over and above 10 is, so you should have paid 30%. But how much you are paying? Getting my point? So 15% savings is there, no? Here 10% savings will happen. And here there will be no say. But still, up to 15 lakhs, you have the option to save your taxes. So tell me, if given an opportunity, if given an option, what would you choose? Remain in default or shift out from default? You don't know anything. You don't know anything. You're not a tax consultant. Become a layman and tell me. What a layman will think? Default is better. Yes or no? Because the tax rates are comparatively lower in the default tax scheme. Getting my point? But if the government gives you some benefit, if the government will give you something, in return they will take everything. Our government is not that kind that giving you this benefit, they will take back something. No, they take everything. Many exemptions and deductions which are there under the Income Tax Act. Heavy deductions, heavy exemptions. If you want to take concessional tax rates of 115 BSE to calculate your total income, while calculating your total income, there are certain exemptions and deductions. Without taking those deductions and exemptions, you will have to calculate your total income. And only on that total income, we are going to apply concessional tax rates. Oh, you want to claim those deductions and exemptions? Claim. No problem. But we'll allow you to claim it only if you shift out. Hello? So first shift out. Okay, I want to claim the exemptions. I want to claim the deduction. These are heavy exemptions and deductions. I cannot leave them. Hello? Oh, you want to claim? Okay, no problem. Claim. But for that, you will have to shift out. Go out of 115 BSE. Go. And if you go out of 115 BSE, claim those available deductions and exemption, calculate your total income. But now on that total income, we are not going to offer you concessional tax rates. We are going to apply normal tax rates, optional tax rates. Getting my point? Which are comparatively higher. Actually, no, these are more beneficial. Because without taking heavy exemptions and deductions, no, your total income will not be this much. Your total income will be this much. And on this much amount of total income, even if you apply the concessional tax rates, no, your tax will be higher only. But rather than staying in 115 BSE, missing those exemptions and deductions, shift out. Claim those deductions, claim those exemptions, which are heavy exemptions and deductions, yes or no? Which will reduce your total income drastically. And once your total income will be less. So even if the tax rates are higher, still you will end up paying less taxes. So that is the decision which you need to take. Staying in 115 BSE, calculating tax at this rate, shifting out of 115 BSE, calculating tax at normal rates, hello, which is the more beneficial option that you are always supposed to do every year. Getting my point? And based on that, you are supposed to guide your clients. After becoming a chartered accountant, will you get clients? So your client will ask you, which is better for me? This is better for you. For that, giving that advice, you should know, na, which is better. Or you will tell him, no, calculate on your own, give me fees. Is he going to come to you for knowing that you don't know anything? Hello? So if you want to give your services as your chartered accountant to your clients, you should be knowing all these things. No, this is bloody your bread and butter. And if you don't know all these things, how are you going to do your practice? How are you going to do? What are you going to do as a professional? It is as good as you have become a doctor but don't know how to prescribe the medicines. Don't know how to treat the patients. Getting my point? Become a chartered accountant and think that if my client will come, I will have to advise. Take the exemptions and deductions. Shift out. Apply these rates. Tax will be calculated. But for him, no, I will do another calculation. Without taking exemptions and deduction, I will calculate his total income and I will apply the default. I will not shift out. Okay, and I will calculate his tax and then I will give him advice. If you will save some taxes for your clients like this, you'll be happy, no? You'll bring more clients to you, more business to you. Understood? Should I move ahead? This is the tax rates. Okay, no? Now pay attention. Pay attention. Tax rates will be this much. If you are individual, HUF, AOP, BOI and AJP. So these tax rates are there on your normal total income. Special income, whether you follow 115 BSE or you don't follow 115 BSE, it will not have any effect on your special income. Special incomes are always taxable at special rates. Hello? But your normal total income will be either taxable at 115 BSE rates or optional tax rates. Will you remember this? Hello, sir. Sure, sir. Okay. Now wait. If you apply this rate, tax will be there. Special rate, tax will be there. This is tax 1. This is tax 2. Tax 1 plus tax 2. Tax on. Now will you add? Now, in case of these assessees, surcharge will come. What will come? Surcharge will come at the rate of 10%, 15%, 25%, 37%. Yes or no? If they follow, no. If they don't follow, 115 BSc. But if they follow, then also the surcharge will be at the rate of not applicable here, meaning that it will still remain. Yes or no? Now, if assessee is any of them and the total income, special plus normal, I'm talking about if the total income is more than 50 lakhs, but up to 1 crore, the rate of surcharge is okay, no? But if that total income is more than 1 CR also, but up to 2 CR, the surcharge rate will be yes or no? But if that total income is more than 2 CR, but up to 5 CR, then the rate of surcharge will be. But if that total income is more than, then the rate of surcharge will be 37%, and it will remain 25% if you follow 115 BSc. They are offering you a lollipop. Remain in 115 BSc, huh? Don't leave. Why? See, if you leave 115 BSc and your total income is more than, we will charge 37% surcharge. But if you will remain in 115 BSc, no? Even if your total income is more than 5 crores, will not charge 37%, will charge only. They want you to stay in 115 BSc. But you will say, no, I don't want to stay, I will leave. Okay, you leave. But remember, if your total income exceeds 5 crores, then the rate of surcharge will be. Will you remember this? Hello, sir. Now pay attention. Huh? This rate of surcharge, can I say this is higher surcharge? I'm not talking about 10 or 15%. I'm talking about 25 and 37%. Here 25%. Yes or no? This is the higher rate of surcharge. Higher rate of surcharge. Either 25% or 37%, which is applicable usually when the total income is more than 2 CR or more than 5 CR, as the case may be. Higher rate of surcharge not applicable on tax. On tax on LTCG under section 112 or 112A, STCG under section 111A, and dividend income. Dividend? I'm not talking about these incomes. I'm talking about the tax which you have calculated on these incomes. See, this is the tax which you have calculated. Hello? And this special tax also which you have calculated. Tax 1, tax 2. Both taken together. Hello? So this is your tax on total income. Hello? Now, on this tax amount, you are supposed to apply 10% or 15% or 25% or 37% as the case may be. Yes or no? But if your tax, if your includes tax on LTCG 112, 112A. If your includes tax on STCG 111A. If your tax includes tax on dividend, on these three taxes, don't apply higher rate of surcharge. 25% and 37% rate of surcharge is not applicable on the tax which you are going to calculate on these three incomes. Getting my point? So if in your tax you have calculated the tax on these three incomes, calculate the tax for these three incomes separately. On these three incomes, whatever tax you have calculated on that tax, don't apply a higher rate of surcharge. 25% or 37%. Maximum surcharge will be 15%. On the balance income, whatever balance tax is there on that 25%, 37% can be applied. Higher rate of surcharge not applicable on tax on these three incomes. Will you remember this? Now wait, I'll give you one example. Your total income is 4 crore 40 lakhs. Possible, not possible? So out of these three incomes, we'll take any one income as an example. Yes or no? So in my total income, if I say I am having STCG under section 111A, this STCG amounting to 2 crores. How much, sir? And what will be the balance total income? 2 crore 40 lakhs. Now see, I am not going to calculate the amount of tax on this 20% or 15% rate. See, no? Short-term capital gain, 111A. What is the rate? Or, so on this, either 20% will be applied or 15% will be applied. Yes or no? On this balance total income. If I follow 115 BSE, then this rates will be applied. Hello? If I don't follow 115 BSE, then this rates will be applied and tax will be calculated. Understanding or not? So whatever tax is calculated, along with this tax, I will have to now add surcharge also. Surcharge is not applied on only one tax. Surcharge is applied on entire tax. So my surcharge will be applicable on tax on this income also and tax on this income also. Now tell me, is my total income more than 2 crores? Is my total income? So if my total income is more than 2 crore, what is the rate of surcharge? So I will apply 25%. I will apply 25%. My answer will be wrong. Why? Even if your total income is more than 2 crores. Hello? But out of that total income, some income was short-term gain. 111. On that, whatever tax you are going to calculate, on that tax, higher rate of surcharge is not applicable. You cannot apply 25% or 37%. Maximum rate of surcharge is 15. So at the most, how much you can apply? 15%. At the most, how much you can apply? So after eliminating this income from your total income, your balance total income still is more than 2 crores. Now you apply 25% on this. Getting my point? Understood? So this tax you will calculate On this tax, you will calculate surcharge, which cannot be 25 or 37%. Yes or no? This tax you will calculate on balance total income by applying this rate or this rate. Getting my point? Whatever tax you have calculated on that tax, you can apply 25%. Why? Because your total, no. Even if your total income is more than 2 crores, but after eliminating this income, still your total income is more than 2 crore. Hence you are applying 25%. Getting my point? Now let me change this example a little bit. Pay attention, huh? This is here, no, here, this will remain same. Hello? Tell me, is your total income more than 2 crores? Total income more than? But after eliminating this income, what amount of total income remains? Is it still more than 2 crores? So here 25% cannot be applied. Here also 15%. Got it, sir? After eliminating that income, still your total income is more than 2 crores. Then apply 25%. Got it, sir? But wait, now I will put you in some trouble. Ready? Ready? Yes, sir. This is a dash. Now tell me. This is 4 crores. You have calculated the tax. After eliminating 4 crores, how much is there? 40 lakhs. On that you will calculate the tax. Yes or no? My question is, will there be any surcharge or there will be no surcharge? First question. Surcharge will be there or surcharge will not be there? Will be there. Why? Surcharge will be there because your total income is more than 50 lakhs. Hello? Is your total income more than 50 lakhs? It is more than 1 CR also. It is more than 2 CR also. Surcharge has to be there. Since your total income is more than 2 crores. Your total income is more than. Your surcharge rate should have been 25%. Yes or no? But here we will not charge 25%. But some surcharge we have to charge, no? Even if after eliminating short-term gains, still your total income goes below 50 lakhs. Surcharge will still be charged. Getting my point? So here the rate of surcharge cannot be more than 15%. Here it cannot be more than. But you cannot say that here there will be no surcharge. Why? Because the balance is less than. Don't do that. Your total income is more than 2 crores. You just thank us that we are not charging 25%, but that does not mean that we are not going to charge any surcharge. Surcharge will be applied. Compulsory applied. Yes or no? But here also the rate of surcharge will be 15%. Got it? So now, if you will go home today, all of you all have ICI study mat. Everyone, pick up that ICI study mat today itself. Okay? In your ICI study mat, first chapter, in your first module, don't look at any theory, I am telling you, otherwise you will go mad. Theory don't touch. But in the illustrations, which comes between that theory. And after the chapter is over, practice questions are also given. Hello? All the illustrations and practice questions, if you will see, no, few questions are there on this same concept which I have just now explained. Go and today itself wind it up. Because in this first chapter, no, your pain point is this point. So this was one concept. Okay. Now pay attention. See, this total income was calculated for whom? Total income was calculated for individual, HUF, AOPBY and AJP. Out of this total income, special income this rate and normal income either this rate or this rate. Getting my point? Now, normal tax, special tax, tax on total income. Add, no surcharge if total income up to 50 lakhs. Surcharge will come only if total income for these assessees is more than 50 lakhs. 50, more than 50, but up to 1. More than 1, up to 2. CR. More than 2 CR, up to 5 CR. And more than 5 CR. Rate of surcharge 10%, 15%, 25% and 37%. But if you are following 115 BSE, then even if your total income is more than 5 CR, the rate of surcharge will not be 37%, it will be 25% only. Yes or no? And remember one thing, the surcharge at higher rates, 25% and 37% is not applicable on taxes on 3 incomes. LTCG 112, 112A, STCG 111A and dividend income. On these 3 incomes, whatever taxes you are going to calculate, on those taxes, don't apply higher rate of surcharge. Maximum surcharge will be 15%. After eliminating these 3 incomes from your balance income, from your total income, if the balance income still is more than 2 crores or 5 crores, then apply 25% and 37%. Will you remember this? Hello, sir? Sure. Now, one more thing. Add surcharge, then less. Add surcharge or less. So, if you are HUF, AOP, BOI and AJP, not eligible for a rebate. Not eligible for rebate will be available only to individuals. So, are you an individual? But you must be a, and your total income is not more than 5 lakhs or not more than 7 lakhs. Yes or no? Then you are going to get rebate of 100% tax which you have calculated. This entire tax, 100% of this amount. This entire tax, 100% of your tax, you are going to get rebate or maximum 12,500 or maximum 25,000. This and this. If you don't follow 115 BSc and if you follow 115 BSc, getting my point? So if you follow 115 BSc, then if your total income is up to 7 lakhs, you are a resident individual and your total income is up to, we are going to give you rebate. We are going to give you how much rebate? Entire tax, full tax amount or maximum 12,500. If your tax is more than 12,500, then the rebate will be 12,500. The balance tax you are supposed to pay. Yes or no? But if your tax amount is less than 12,500, entire amount of tax take as a rebate. Got it, sir? Sorry, 25,000. 25,000. Why? Because we are talking about 115 BSc and your total income is up to 7 lakhs. Then the limit will not be 12,500. Then the limit of rebate will be 25,000. But if you are not following 115 BSc, if you are shifting out, if you are applying these tax rates, yes or no, then total income up to 5 lakhs, you are going to get rebate. How much? Entire tax or 12,500. Understood? Sure? Now pay attention. One important thing. Tax on LTCG under section 112A. Tax on LTCG under section cannot be claimed as what? Rebate. What does this mean? Entire tax we are going to give you rebate, or 12,500 or maximum 25,000. You take the entire amount of tax. Now this tax can include tax on any income. Tax on winnings income, tax on dividend income, tax on short-term gain, tax on your normal income, tax on your salary income, tax on your any income. Any tax can be claimed as rebate to the extent of maximum 12,500 or 25,000. Depends on the regime, default tax regime or optional tax regime. Yes or no? Any tax, all the taxes we are ready to give you as rebate. But one tax, you cannot claim this tax as rebate from us. And that tax is tax on long-term gain under section 112A up to 1 lakh. No tax. But on excess we are charging 10%, no? Up to 1,25,000 there is no tax. But on excess we are charging 12.5%. So, bloody, if we are not charging any tax up to 1 lakh or 1,25,000, and on top of that, on excess amount, whatever tax we are charging, and that tax also is peanuts, very small amount, 10%, 12.5%, and that also you want as a rebate, we are not going to give you. So, no rebate. Got it, sir? All the other taxes you claim as rebate, no. Tax on winnings income, we will allow as rebate. Tax on dividend income, tax on salary income, tax on house property income, tax on business income, any type of tax, even the tax on long-term gain, 112, tax on short-term gain, 111A, all the taxes you claim as rebate from us, we are going to give you. But this tax we are not going to give you as a rebate. So from your tax amount, no, from your separate long-term gain, 112A, this tax you are supposed to compulsory pay. Other taxes you can claim as rebate up to 12,500 or 25,000 as the case may be. Will you remember this? Sure. This is the end of individual HUF, AOP, BY and HFA. This is the end. But one small discussion I want to do. What is this? And what is this? This is basic exemption limit. This is, see, in case of senior citizen, the basic exemption limit is 3 lakh. And if you are a super senior citizen, then the basic exemption limit is only if you shift out. But if you remain in 115 BSE, only 3 lakhs in all the cases. Individual, no? Senior citizen, super senior citizen, normal individual, HUF, AOP, BY, AJP, anyone. Basic exemption limit will not change. It will remain 3 lakhs only. But if you are shifting out, going to the normal tax regime, then the basic exemption limit can be 3 lakhs if you are a senior citizen. Or it can be 5 lakhs if you are a super senior citizen. So, up to 3 lakhs no tax, then 3 lakh to 5 lakh, 5%. 5 to 10, 20%. Above 10, 30%. Yes or no? If you are a senior citizen. What if you are a super senior citizen? Both the slabs, first 2 slabs will go away. First 2.5 lakhs, no tax. Then 2.5 to 5 lakh also, no tax. Yes or no? Then directly start from 5. 5 to 10, 20% and above 10, 30%. This is super senior citizen. Yes or no? Now, one question I would like to ask you. Who is a senior citizen and who is a super senior citizen? Come on, tell me. Above 60, then above 80, then super senior citizen. Yes or no? See, these type of answers you are giving, no, meaning that you don't read the things properly. You don't understand the things properly. That is the reason why you don't get marks. Always be very, 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 very specific. Who is a senior citizen? Above 60. What if my age is 60? What if my age is 60? Dot 60. I'm not above 60. I'm 60. Am I a senior citizen? Yes or no? Then why are you saying above 60? You have to say 60 or more. Hello? And what if senior citizen above 80? What if my age is dot 80? Still I am a super senior citizen. So you always have to say 80 or more. Hello, sir. Still, you are not a senior citizen or a super senior citizen. My age is 90. My age is, just kidding, huh? Example. My age is 90. Still, I am not a super senior citizen. Because I am non-resident. You just see the age. Gone. For senior and super senior citizen, along with the age criteria, residential status criteria is also important. Even if you are 500 years old, you will not be treated as a senior citizen or a super senior citizen if you are not a resident. In order to become a senior citizen or a super senior citizen, you have to be a resident first. HUF cannot be senior or super senior citizen, by the way. AOPBI, AJP, only the individuals. And those individuals who are resident, whose age at any time during the previous year, throughout the previous year, no, any time, even for a single day, the age is 60 or more, or 80 or more, then these type of resident individuals whose age at any time during the previous year is 60 or more, 80 or more, will be treated as senior citizen or a super senior citizen. Will you remember? Hello? Sure? I will try to confuse you. Ready? Ready to get confused? You're supposed to give me correct answers, huh? See, what is my previous year? What is my previous year? 24, 25, no? So this is your previous year, 24, 25. 24? In the previous year, 24, 25, age is 59 years. See, the same discussion will be applicable in case of super senior citizen also. So instead of 59, I could have taken the example of 79 also. Yes or no? For that, I am not going to do a separate discussion because the same logic will be applicable on that. Okay. So now, my age is 59 years in this previous year. 1st of April 2000 and this year or next year? This date will come in this year or next year? This previous year or next previous year? So this date is coming in the next previous year. This is my birthday. This is my birthday. So if I am 59 years old right now, if I am 59 years old right now, when will I celebrate my 60th birthday? When will I celebrate? When will I celebrate? I will celebrate on 1st of April. But I have completed 60 years as on 31st March itself. Huh? I will ask you one simple question. If you have to count one full year, starting from 1st April, it will end on one full year completed. On the next 1st April, no? After completing 1 year, you are entering in the second year, which will go up to 31st March. On the next 31st March, second year will be complete. And on the next 1st April, you will enter in the third year. So, bloody, if you are 59 years old right now, your birthday falls on, that means 60 years already completed on 31st March. And you are entering into the 61st year on 1st April. 60th birthday, no? 60 completed. 60 completed. So now next year you will enter in the 61st year. After completing 60 years or more, now you will become 60 years and 1 day on 1st April. Meaning that you are completing your 60 years age on 1st, or you are completing on 31st. 31st, hello? So on 31st this year only you have completed 60. So when are you becoming senior citizen? Next year or this year? From this year only you will start getting the higher basic exemption limit, 3 lakhs. Understood? This can be exploited in the question. You just thank God that I don't set the papers. Because these small information, if I will set the paper, no, I will try to exploit all these informations in the question. If you will save yourself from one mistake, no, in that same question, there will be 5 points where you are going to commit mistakes. These kind of silly mistakes. Got it? Take a small break, a meeting after that break. Okay, no? Break of 20 minutes. Sufficient, no? Or you want more? Enough? 20 minutes. We are meeting in 20 minutes.